Welcome to the Global Investor Podcast, a show that focuses on helping foreign investors enter the lucrative U.S. real estate market. Host Charles Carillo combines decades of real estate investing experience with a professional background in international banking to interview experts in all areas of U.S. real estate investing. Now, here's your host, Charles Carillo.
Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Brad Hubbard. His company, National Flood Experts, was created from 20 years experience in civil engineering. And as a licensed insurance agent, Brad specializes in reclassifying high-risk flood zone properties into low-risk properties, which has saved his clients over $10 million in annual flood insurance premiums. So thank you so much for being on the show, Brad.
Thanks, Charles. Glad to be here.
So what was your background prior to starting National Flood Experts?
Yeah, so my degree is in civil engineering, and I worked in civil engineering for about 12 years doing site design, civil site, and roadway until I sort of grew to hate it. After about 10 years of it, I just didn't really enjoy the engineering world anymore and ended up working for my wife's cousin who had an insurance brokerage. And he's like, Brad, you're good with numbers, you're good with people. Why don't you try insurance? So went over there and sold insurance for him for a couple of years. And after a little bit of time, I realized that most insurance agents don't really like flood insurance. So I ended up doing a lot of the flood insurance for his company and started to put my engineering hat back on. I looked at these properties and, you got the lenders saying they need to have flood insurance on this property. And I'm looking at it going, why? And so I started making some calls to FEMA, asking around, and their answer was, well, if you know a professional engineer, they can do this and this and this. And I was like, well, I'm a professional engineer. And, for the first few clients, it's like, hey, 3 days later, I had them out of the flood zone. They're no longer required to carry flood insurance. And that sort of started the ball rolling on this entire thing. And that was about 8 years ago.
Okay. So can you tell us exactly what you guys do? So I will go through like the process later on, but what is a typical service and process for you kind of involve, I guess you would say?
Sure. What we do, the way I kind of describe it is it's flood insurance consulting from an engineering perspective. So we try to first see if any property that we're looking at should be required to carry flood insurance. Are the maps correct in this area? If it is correct, then what we'll try to do is, okay, so it is correct. They should be required to carry flood insurance. Are they paying the right rate? Are there things that they can do to maybe bring those rates down a little bit? Was it rated incorrectly? Is there, are there any other options here? So it's flood insurance consulting from, really an engineering perspective.
So how do you determine the true risk of flooding on an investor's property?
Sure. We use a lot of FEMA's data. FEMA has spent hundreds of millions of dollars mapping the entire country for prospective floods. And the private world has really got into there much more in the last 10 years as well. So there's a lot of good data out there. So what we try to do is really take a look at the building from a flood risk standpoint. How is it elevated? How is it constructed? What other things are here that may or may not impact the flood? So we'll, from anything from sending one of our surveyors out to do what we call our flood expert survey, to just looking at any information, some existing information, if they've got elevation surveys, topographic surveys, and we try to really understand what's going to happen here as it relates to flooding and ultimately flood insurance costs for the clients.
Okay. So how do you prepare properties for future flood events if someone already owns a property?
Sure. There are things you can do. What we really focus on here is more the financial aspect of it. Trying to save these investors as much money as possible on a year-to-year basis, increase that NOI, because flood insurance, depending on where you are, can be a huge hit to the actual income you're making on a property. But if you've got a building and you are concerned with it flooding, on the commercial side, they've got what it's called dry flood proofing. And basically, for lack of a better way, it's like hurricane shutters for flood. So they've got flood-proof doors and panels that you can add to any kind of an opening you have on the building, whether it's a door or storefront glass, things like that, that will impede water from coming into the property. And they also give you benefits on your flood insurance premiums for having that. But those are really the main options when you've got a building. It's there. It's been there for 60 years. Unless you want to knock it down, those are the best options out there right now for trying to prevent getting water and damaging those buildings that you own.
I imagine you consult with new developers. How do you design, or how do you consult with developers on designing future projects that lower the risk of flood events?
Sure. What we do in that, kind of a scenario is our number one goal is build it in a way that will make flood insurance either A, not required, or B, be as cheap as possible for the long term. One mistake that we see a lot with developers is, you're coming in, you want to build a building, you want to build it, you want to get your permits to code as cheap as possible, right? You're trying to, and you'll see them try to cut corners on fill dirt and things like that, where maybe they'll save $20, $30, $50,000 on the construction cost, but it'll cost them long term. So what we really try to do is build for the long term flood impacts. What are 10 years of flood insurance going to look like on this building? Well, what if you raise the average elevation around the outside of the building? What if you brought the building up an extra 6 inches higher than code is saying, but that's going to knock your flood insurance costs down by 40%. So we really try to look at it as not as much of a how much is it going to cost to construct it? What are your 10 years costs going to be of operating it? And how can we get that number down as far as possible?
One thing I want to circle back to is you were talking about the FEMA maps. And I know when we initially had met a couple of years ago, and you were saying that a lot of this information is outdated. And then you were also saying another thing. Well, yeah. How do you work with outdated maps then and information?
Well, like you said, the maps are outdated. Even a brand new map that is coming, like there you are, you're in Pinellas County. You guys are getting new flood maps here this year, most likely. In talking with, floodplain managers and stuff, that data is already 8 years old. The data that they're putting out right now, just because that process takes so long to go through. So you've got, survey data from 2012, 2013 that they're using to create these new maps. And, just the process of everything, it's 2021, and you've almost got 10-year-old data in there. And that's for a brand new map. If you're looking in some of the areas where you've got a map from 1998, 1982, there are some significantly old maps out there. And especially here in Florida, the amount of construction and development that's happened, it's not the same scenario. Nothing looks like it did even 10 years ago, much less 20 or so. Yeah. So the maps, when they're done on a very macro basis, right? They're trying to figure out how the water is going to impact this entire area. And what we do is look really, really specifically, property by property, and even structure by structure. How's it going to impact this building right here on this property? So that's where we find the errors in the mapping. They do a great job. They really do. It's such a massive task. It's impossible to be accurate on a, building by building basis.
Yeah, I would imagine so. I imagine a lot of that stuff has been updated when you're in different counties, and it kind of leads you to having to put together the puzzle of what you can do and how you can help your client.
Yeah, and Pinellas County has a lot of money. If you think about a lot of the smaller municipalities that don't have the money to put into flood studies,
right?
We're just operating with bad data to begin with.
Yeah. So I've been down in Florida for nearly 10 years, and flood insurance was not something that we really utilized when investing in real estate up north. And can you explain flood insurance in just an overview of how it works, and it's different, how it differs from property insurance, and what property? Just give a little overview to listeners that might not be aware and have flood insurance in their area.
Yeah. So basically, flood insurance is just like every other insurance. It's there to insure you in the event of a flood. It is not included on most property insurance policies. So if you've got a commercial building in, mid-state New York, you're probably not going to have flood insurance on it. You're not going to be covered for flood insurance. Where flood insurance comes into play is anytime that you have a loan, especially a federally backed loan, which is pretty much everything out there right now. That lender is going to require that you carry flood insurance on top of all the other insurances you're carrying. Obviously, you've got your hurricane, your fire, all that kind of stuff. They also require flood. The difference with flood is 90+% of all the flood policies out there are written through FEMA, a federal backed program. So you've got government insurance, which leads to all sorts of problems. But so if you have any kind of a property that you have a federally backed loan on, they're going to require that you carry flood insurance on it. That's the real basics of it. And the standards are getting more and more strict, that we've seen with Fannie and Freddie recently, that they're requiring not just the base policy of the 250 or 500,000, but they want full replacement cost for your $20 million building. Even if it's a high rise, they still want full replacement cost. They want business income loss, all of that on top of your typical flood insurance policy. So it can get to be very expensive.
Now, is it so if you're dealing with FEMA insurance and I go to one, I'm getting property insurance through someone and they give me a quote for flood insurance, is it going to be the same at the next place I go to if it's through FEMA, or is it going to, or it can differ?
It can differ. So the theory is every agent can write it the exact same and give you the exact same policy. Where the problem comes in with that is the actual underwriting of flood policies. It's very difficult. You know, it's not a fire policy where they say, yep, your address is here, you're a masonry building, here's your price. With flood, there are 30 different variables, from elevation certificates, from how the building is built, from using things like grandfathering. You can go to 5 agents and get 5 different quotes, even though that's not the way the system is designed. It's supposed to be designed in a way that everybody gets the same quote. Different people's level of expertise in flood will give you different numbers each time.
And one last thing on FEMA on the pricing, is it, you know, for Florida, I've read that Florida's paid in a lot more into FEMA insurance than other states, and that, like, I guess you'd say throughout the Southeast. How does that change? Is that going to change at any time in the future where they might dial back Florida flood policies or make it less expensive, or we're just still paying into it?
Like you said, you know, I call us a donor state. You know, we've 35 or 37% of every single policy in the country is in the state of Florida.
Okay.
But, you know, we really haven't had the major losses that other areas have had, the Northeast with Sandy and Katrina over in Louisiana, and even just your annual riverine flooding along the Mississippi and other, you know, rivers throughout the country. Florida doesn't have a lot of that. So we've put in, I don't remember the numbers. It's been a couple of years since I've looked at it, but basically, you know, if we put in 10 billion, we've only had 3 billion in claims, where a lot of the other states are flipped of that. You know, they've had 3 billion put in and they've got 10 billion in claims. So yeah, we're a donor state, and that's not changing. You know, all the new maps that I've seen, everything is getting worse, not better, across the country. And that's not just Florida, it's just climate change, and with development and all that different stuff, they just foresee the long-term impact of flood as being worse in 5 years than it is now. So unfortunately, it's only getting worse. You know, we're a big peninsula sticking out in the water. So even though we haven't had the claims, the possibility is there.
Yeah, I've seen even at all parts of climate change, I guess, have been affecting. And it's, I mean, in our insurances on investment properties all across the United States, I mean, they've been consistently going up 10%. I mean, we underwrite now 10, 15% annual increases in insurance, which is crazy. Never would have done it before. Usually it was 3 or 4% 10 years ago. Right. And now I think that the insurance companies are actually buying the data from these companies that have this information, saying that, you know, it's going to be a long-term thing coming, you know what I mean? Where it's just going to be more and more expensive to insure property.
Yeah, that's been the trend. I've noticed the same thing. And flood is probably worse. It's no better, that's for sure.
So, Brad, when should an investor reach out to you and your company?
Honestly, anytime. You know, I know that's a crap answer, but you know, if you're looking at acquiring a property that has some flood impact, let us take a look at it. You know, we can really help you make a decision for go, no go on whether or not this makes sense. You know, we could look at it and say flood insurance is going to triple over the next 5 years. Run away from this. Or it's the flip. You know, hey, they're paying $100,000 on flood insurance in this property. You could pay nothing. You've just gained $100,000 in equity, you know, or in your NOI right off the bat. If they own a property right now and, you know, flood insurance is part of it, let us take a look at it. Let us see if there's anything that we can do to, increase the value of that property. If you're going into refinancing, same thing. If you can increase your NOI, that's more cash you can get out from the bank when you're doing it. There's not a bad time to reach out to us in that whole life cycle of owning a property in a flood zone.
So what would be the process if someone owns a property already, whatever it might be, apartment complex, large or small, and they reach out to you? How does the process work after they make contact?
Sure. So what we'll do is we'll get as much data from them as they have. So we'll take the flood declaration pages that they have, any elevation certificates that they have, and we'll start our internal review process, which is like 13 different points that we look at to see what we can do for the property. If it's something where we can get the map changed, we can take it from a high risk to a low risk property. We'll go under contract with them, which will basically be in it. We're going to do this. We're going to get it moved from an A to an X. And then when we're successful, we bill the client. So we review everything for free. Our contracts are only based on the savings that we provide, and it's all 100% guaranteed. So in some scenarios there where they'll give us all that data, we'll need to send one of our surveyors out and do our flood expert study on the site, just to confirm some data, get some better data if they don't have it. But that's really the process. Is we take a look at everything they have, give them a proposed solution, go under contract, and get it done.
Nice. Can you give us, I know you told me before about saving so much money on a complex in Texas, but can you give us a couple examples of some big wins that you've had for your clients?
Yeah, absolutely. Biggest one we had was recently up in Virginia. It was a company that owned 4 different apartment complexes in a couple of different towns there. We ended up saving them $185,000 a year in flood insurance across those 3 or 4 different properties. Around here recently, we've had some condos that we've been able to get the flood insurance dropped. We obviously, you've got condos in the water, you're not going to get rid of flood insurance, but we've gotten them up to like 5 years of a refund, $400,000 refund to the association. Wow. Obviously, they were through the moon for that. Apartment complexes is where we have our most success, where I can throw some really big, crazy numbers at you, where we've had that $30,000 here, $80,000 here of savings on flood insurance by getting it removed.
And say, for instance, that person then sold it, or that group sells it after working with you. That is, I don't want to say grandfathered or transferred, but that can now be brought to their insurer and show them, hey, this is what we were doing before, and it's not just for that owner.
Correct. Yeah. Okay. Anything that we do it's for the property. It's not tied to the ownership in any way.
Nice.
So when the property is sold, it transfers to the new owners, and anything that the previous one was doing, the next one can do it too.
So what are the biggest mistakes or common mistakes that investors make in regards to insurance in general or flood insurance?
I really can't speak to insurance in general, but with flood, I'd say the biggest mistake that is made is, kind of back to your comment earlier, that any insurance agent can give you the same price on flood insurance. So people, the biggest mistake is doing nothing. Just taking, okay, I'm in a flood zone, I have to pay flood, here's my bill, pay it, right? Question that a little bit. Send it to us, let us take a look. Maybe you shouldn't have to pay flood. Maybe the building is wrong on the elevation certificate. Maybe the flood zone when the building was constructed in 1979 was different, and you can grandfather back to that. Doing nothing and just paying your bill is the biggest mistake, because about 60% of the time, there's something we can do. I mean, you're talking well over half of the time we can do something to have a cost savings that, you do nothing and you don't even have the potential to get those savings. So that's the biggest mistake, is just doing nothing.
Interesting. Okay. Well, how can our listeners learn more about you and your company, Brad?
Easy is, we've got our website, nationalfloodexperts.com. There's some good information out there. We're on social media, Instagram and Facebook, though I'm terrible at those, but we've got people who work on them, or just give us a call. The phone number's on our website. It'll probably be on here too, but we'd love to talk to you and see how we can help. That's really what we just try to do, is how can we help our clients?
Okay, perfect. Well, thank you so much for coming on. I'll put all those links into the show notes, and looking forward to connecting with you in the near future.
Thanks, Charles. Appreciate it.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate, but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Thank you for listening to the Global Investor Podcast. If you like the show, be sure to subscribe on iTunes or Google Play to get new weekly episodes. For more resources and to receive our newsletter, please visit globalinvestorpodcast.com. And don't forget to join us next week for another episode.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars Incorporated exclusively.